Risk is part of life. You cannot avoid risk. If you want to have some return, you need to take some risk. This is true by definition. In life, it's normal to be emotional, right? This is a reasonable thing for humans to do. You can be happy, you can be sad. This is allowed. But within the context of portfolio construction, we should be quite boring, if I can say so, quite sober, quite calm.
How do you place India in the context of emerging markets, and does anything change in terms of your long-term outlook towards India?
It's a very complicated moment, very difficult moment, frankly, but it will pass. And when it passes, we as investors want to make sure we're there to benefit from the market rally, which will take place.
If you can consider all these things as part of a holistic approach, then you can invest with clarity and confidence. Hi, I'm Herin Shah, Head of Investments at JioBlackRock Investment Advisers. When markets become volatile, investors everywhere ask the same question: what should I do now? The reality is, the answer often depends less on the headline and more on how much risk you can take and what are your financial objectives. That's why periods like this underline the importance of an investment plan that's aligned to you. Rather than reacting to global news in isolation, an investment plan exactly as per your needs. To help some context on what's behind the headlines, I'm joined today by Ben Powell from BlackRock Investment Institute. Ben is BII's Middle East and APAC strategist, and he's in India this week speaking directly with investors, helping them understand how to think about the current situation and navigate what is a very complex and an evolving situation. If we think, Ben, the current situation and the fact that there is a lot of noise, there are a lot of signals as well, short-term, long-term, how do you filter through the short-term noise and look at the long-term signals? And how do you think investors from a long-term perspective would want to look at the current situation?
Firstly, I think it's extremely important that investors stay relentlessly focused on their financial goals. So we can be very uncertain about financial markets. We are in a very volatile moment. I live in the Middle East. It's been very dramatic, I think it's fair to say. So there's a lot of uncertainty in markets, maybe a lot of uncertainty in the economy. But what we can be more certain on is our financial goals. So I have 4 children. I'm trying to help them in their life. This is unchanging, and my focus is relentlessly on this. So what we would suggest from the BlackRock Investment Institute is stay focused on what are you trying to do. You're trying to fund your children. You're trying to fund your retirement. You're trying to have a safety net in case of an unexpected healthcare challenge. And then you can have assets, you can have holdings in the market which align with your goals. So I think it's very important that we all stay very focused on the question, what am I trying to do? Have financial holdings for. Stay focused on that. Try and stay invested in a way that aligns with those goals, and try not to be too whipped around by the news flow, which of course is very exciting, dramatic, and frankly, a little bit scary at the moment.
Great, Ben. So what basically we are learning is having a goal, but being more importantly focused on the goal despite the news, the headlines, and the short-term volatility is very important for helping investors navigate a situation. But at the same time, when we think about the current US-Israel and the war in Iran, the situation evolved 3 to 4 weeks back. The initial assessment was, like with every other crisis of the past, it will take maybe a couple of weeks before some kind of a resolution is arrived at. We now almost 6 weeks into the event. Every crisis feels same, similar, but different at the same time. What's really similar and what's different this time?
So what's similar is it will pass. Ultimately, this will end. It's very hard to be too certain as to when this will happen, but I would be confident that at some stage this will finish. And what that means for investors is they should be careful about being too negative. This is risky. Sometimes, Herin, you hear people say, I'm in cash, I have no risk. This is a huge bet. And what we saw in 2025, interestingly, around the Liberation Day situation, the US tariff situation, was in fact a resolution, and then markets performed very, very well, and many investors missed this. So what I would say in this crisis is try to stay invested, try to stay aligned with your financial goals, try and stay in markets. Don't be too bullish, don't be too bearish. Try and stay convicted as to what you really believe, how that aligns with your goals, because this will pass. It's a very complicated moment, very difficult moment, frankly, but it will pass. And when it passes, we as investors want to make sure we're there to benefit from the market rally, which will take place.
So uncertainty, look at the short-term noise, but focus more on the long-term picture as well. That's great. And Ben, what we also observed over the last few days and weeks is all asset classes, whether that's domestic or international, whether it's equities or it's gold, everything has fallen and moved around at the same time. How do you think about diversification in moments like this?
It's very important. Diversification is the secret sauce, I guess, of our industry. It's not enough just to be bullish or bearish. We need to be a little bit more sophisticated than that, and thinking about having a portfolio. Sure, we want performance. That's for sure. But we also need to think about the risk and the benefits of diversification. So within portfolio constructions, we want to be very focused on both the return, owning stuff that goes up. This is definitely a good thing, but also having a diversification in the portfolio to give us some resilience and some ballast in the portfolio, so that in the difficult days and in the difficult moments, we have some resilience in that portfolio, which can allow us to then flourish when things hopefully improve in the near future.
So although temporarily we might see everything moving together, but over a long term, diversification still is the most important concept when people build portfolios. Excellent. And then when we think about risk management, risk is a concept, something which people talk about but pay less attention to on a normal day. But events like this highlight the importance of risk management. When you think about risk management, how exactly do you think about risk management?
We think about risk management from a mathematical, numerical, quantified approach. So in life, it's normal to be emotional, right? This is a reasonable thing for humans to do. You can be happy, you can be sad. This is allowed. But within the context of portfolio construction, we should be quite boring, if I can say so, quite sober, quite calm, and try to think about risk in terms of the opportunities to the upside, and also the need to be more diversified to give us resilience, because risk is part of life. You cannot avoid risk. If you want to have some return, you need to take some risk. This is true by definition, but we want to be thoughtful around the risks we're taking, to expose our stuff within the portfolio to good trends, good themes, but also have some risk safety net, if I can say, within the portfolio. And that gives a balance of return and an acceptable level of risk depending on everyone's individual circumstance.
So what we understand is once you can manage your risk, you live another day to fight another battle. So you have to protect your downside to be able to participate in the upside later on. That's awesome. When you think about the global picture right now, and given dependencies of various countries on energy, on oil, how do you place India in the context of emerging markets? And does anything change in terms of your long-term outlook towards India?
Not really. So we are very constructive India. For the reasons I think everyone is aware of, we have a very strong GDP growth today and looking forward. GDP, the economic growth, is driven really by two things. One is how many workers do we have and how productive can they be? And for both of these, India, if I can say so, is two ticks. Clearly, we have a beautiful growth in the overall labor market, to the extent that by the end of this decade, around 1 in 5 workers globally will be here in India. So the overall scale of the workforce is growing very appreciably. Furthermore, the workforce is becoming more and more productive. We are becoming much more digitized, much more technologically sufficient and competent here in India. I think this is very likely to continue, enabled over time by many things, but including artificial intelligence. So when I think about India and the prospects over the next several years, I think the GDP outlook looks very strong. At the moment, we have a headwind, of course, with the energy problem, but this will pass. And then I think India's strong underlying fundamentals can shine through. So this is why we at the BlackRock Investment Institute, we have a structural overweight to India because we want to benefit from what we see as a sustained and structural growth story for many years to come.
Excellent. So as we understand in long-term wealth creation, investing discipline, risk management matters more rather than predicting the markets. Markets will continue to move over time, headlines will keep changing, but focusing on long-term outcomes always improves investment portfolio outcomes. What would we expect our investors in such kind of situations is avoid reacting emotionally to short-term noise and have a very clearly defined investment plan. Manage your risk and stay diversified in the right manner. Right diversification matters a lot in such situations. These kind of situations always help you to think about tactical changes like staggered investing or rebalancing portfolios whenever the situation demands. If you can consider all these things as part of a holistic approach, then you can invest with clarity and confidence. Ben, thank you for helping us put today's complex geopolitical situation in perspective and helping think through how we can navigate these situations.
That's my pleasure.
Thank you.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.